Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future one percenters? This is Marathon Money, brought to you by WinCrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm here with my boy Kenny Coins. What up?
Ching ching.
Yeah, and we also got Chart Man here with us, Xtro. What's up?
What's going on, fellas?
Chart Man.
Steady making that money.
All right, man. Yo, market recap. Hey, we said last week that we did not like the S&P and the NDX below the 200-day. And what happened? Them boys popped up above the 200-day. They listened to us, man. They followed directions.
I mean,
We got control.
We controlling the market.
We control it, man. They the puppets. We control it. But I like this now. I like this level. I do not like those two under the 200 day.
Nah.
You know what I'm saying? Even though I feel like right now it's a little bit overbought, but I think Xtro can speak to this, man. I think that the main markets, they can stay overbought, oversold for a little longer.
Long time. Yeah, we saw that the last, we saw that 2016, 2017.
I mean, we saw that more recently in October through January when they stayed
that's
over.
what I'm saying. But it was 2 years overbought. You know what I mean?
Well, yeah, okay.
So like, yeah, it could. You got 100% right. It could be overbought for a very long time.
Yeah, it can keep going. And as y'all know, that's been my prediction for quite some time. I've been saying new highs for a while now, and my prediction didn't look right, obviously, in December, but like I said then, even then, I still see it, and it popped.
That was minor bumps and bruises, man. You know what I'm saying?
That was the Boeing 737 Max.
Oh man,
at that time, for the market. But
I wanted to drop that 17-year bull market Xtro predicted 2 years ago.
Xtro predicted a lot of good stuff, man.
I'm not gonna lie, man. When he did it, and after what we went through the last, just like between 2016 and until now, I'm gonna be honest with you. I'm starting to think this man's right because the way the market's moving, man. A lot of people don't remember we came from 16,000. Huge.
Yeah, just kept moving.
I gotta give Kenny his props, man, because a couple weeks ago we were thinking about selling Take Two when I think it was like 87, 86. Kenny was like, "Nah, man." Kenny held strong. Kenny was like, "No, man, no, we ain't selling it." I was like, "All right, yo, I'm rolling with you, man." And that was a good prediction right there, man. I think we still down slightly on the quarter, but
of course
that was a good
still
come
down
out,
like 4%.
That was still good. I mean, being down 4% is better than being down like 10 wherever we was down at.
Yeah.
Oh yeah. That's always better.
We losing coins but gaining coins. You know what I'm saying?
Same time.
Yeah, you should just let that one play out just for like a split second, because that's how many coins you lost.
That's so true.
So, man, I had to give the props to Kenny, and we gotta let people know that we coming up on a new quarter, and I know we're gonna do our Marathon Money stock picks every quarter this time. So make sure you tune. I don't know if we're gonna do it next week or the week after. When you want to do it, Kenny?
I don't know. It's probably gonna be the week after next week. That's probably gonna be the best time to get them picks rolling out. But I do want to say one thing. When I ask question, one thing. What do you think about glue?
Oh yeah, this is the Cam special from 1995.
25% up for the year right now.
Yeah, Cam, this is literally like 10 years ago we was talking about this stock. Back when we were looking at Zynga and all of that.
Yeah,
for, like online gaming and stuff.
It wasn't quite 10 years. It was probably 2011, 2012.
All right. That's close enough. But that one at the time it was kind of range bound. So
no, and let's just be honest. At the time, it was terrible.
Yeah. Because we looked at Zynga too, so that's why that says it all. But if that's doing good, Zynga's got to be doing something, right?
Zynga,
100%.
Zynga only at like, I don't have it in front of me. I think they're only like $5 right now, so they didn't move up as much as Glue.
Yeah, but it moved from like $3. No, it was like 4. It moved like 4 from 4 to 5.
Yeah, I mean that ain't like Glue was at the same range. It was like $3-4 and moved up to like this $10 range. So
I forgot I have a share of Zynga. Remember, kid, when you signed me up for Robinhood?
Oh, you got
yeah.
I was mad at you. I was like, Cam was like, sign up, we get free shares and stuff. I'm like, all right, he had a hot share too. They gave him something hot.
Yeah, Cam got the best shit out of all of us.
The next thing you know, I get Zynga. I was like, man, I ain't messing with you no more, man. I got my one share sitting somewhere in La La Land.
It came up
probably $1.
It came up $1 for you though.
Yeah,
you know what I'm saying? That's like what from 4 to 5. That's like
that's a 20%.
That's 20% move. That's the Wincrease Marathon Money way, right?
Of course.
Yo, you know what? Man, I'm sorry, we rambling right now, but for one of these podcasts, we're gonna do this, man. We're gonna compare stocks to STDs.
Yo.
So this is what I mean. Like GE is like gonorrhea or chlamydia.
I say AIDS.
No, that's not like no.
Yo, so you say there's no coming, but G's no coming back?
Yeah, that's what you're saying. See, if
that's
it's like
G's not coming back?
gonorrhea and chlamydia, that's curable. GE, now you don't want to have it, but it's curable. So GE is still curable. You feel me?
Wait, actually, you saying GE's done?
I've been saying GE.
Because once you get AIDS, you done. At least HIV you can live with.
All right,
but
let me.
But AIDS, you done.
Let me look at my chart one more time. Last time we was talking about this, I was looking at it. It had formed a Morningstar pattern, and that was a signal that the stock was at least going to stop bleeding. And for the most part, it has. I see it bounce now. But I don't know, man. Well, as we know, names can go out, man. And this stock is, the company itself is just terrible.
Okay, but what I'm saying is it's curable.
All right, I'll give you chlamydia. Go ahead.
Okay,
go ahead.
There you go. All you gotta do is roll up, get some pills or a shot. It's over. You know what I'm saying? That's how
money
I feel.
Can rebound. Yeah, you can take your money back out and get something better if you needed to. Yeah.
I feel like GE, they can come back up. They can. Now something like no, I'm gonna save it. I'm just giving y'all the example. That's how we gonna do it. You know what I'm saying? We're gonna compare them like that. So, all right, we're gonna get into it. Obviously, we got Chartman here. We got Xtro. So, man, I don't know. Just gonna let you just, do your thing. People like the charts. Obviously, I'm not skilled at it. I think Kenny is semi-skilled at it, but obviously, Xtro, all of the, like you just said, the Morningstar, the oatmeal cookie pattern.
Yeah, Cam will get creative with his name. So yeah, as you know, we've been doing this for a while, and Cam witnessed me from the beginning of learning this whole stuff. And well, I've made it a long way, and I've also got the knowledge to get the weird name patterns. And
Well, how do people even get started to start to recognize these patterns though? You know what I'm saying?
application. So it took me years to get to know all of this stuff, and there are a lot of patterns out there. There are plenty more out there that don't really have that much significance, and then you'll learn over time which ones show up with more frequency to pay attention to.
Mm-hmm.
So there's literally, I got a book that's got a whole bunch of them in it. It's called. Oh, you know what? While we at it, we might as well go ahead and drop dimes on it. It's called Encyclopedia of Chart Patterns, and it's a Wiley book. It's got a whole bunch of them in there, and it gives you a breakdown of how frequent they have popped up, how powerful they are, and you'll figure out there's just a handful of them. Honestly, there's probably about 6 of them, maybe 7 of them that have some.
The most.
Yeah. I mean, they take the most as far as a setup is concerned, and there's certain patterns I've never lost with. When I see them, I'm like, yeah, I'm in. And I just push all my chips in the middle.
Now, would you consider like using those more for options or stock?
For both. I mean, you got to read the chart for both. So
right, but I mean, like a pattern. These patterns, they usually, to my knowledge, they usually last a certain amount of time. So if you see something forming, you go max. Excuse me. Obviously, you can use it for both. If you want the maximum amount of return, you would use it for options.
Yeah, and that all depends on how you craft your option strategy too. And you could do it to be more risky, or you can do it to be more safe. And I like to do my stuff as safe as possible. But when I can get greedy when others are fearful, I'm gonna do it.
Sound like me when it was like December, man.
Yeah. Yep.
Cats
I took advantage.
Cats were like out here like, man, nah, man, I can't do it. You know what I'm saying? Like the market was just falling and it was never coming back. Man, it's always gonna come back. It's always gonna come back.
Exactly.
Unless, somebody hit us with a nuclear bomb or something like that. You know what I'm saying? Market's always gonna come back.
I'll be there to pick up the pieces.
even if somebody did, I'd still be like, I'd still be hitting that buy button on something.
Yep.
You know what I'm saying? I don't care what it is. I'm buying something.
Yeah, because somebody got to rebuild, so I'm buying Home Depot.
Hey, that's funny. Home Depot, Lowe's. What's that other one? Liquidators, or what is it?
Oh, that's the one that got hit recently.
Yeah, I heard you talking about it. What was it?
Yeah, they got some fine levy against them. I guess they got to pay, and they probably ain't got it. So that happened to them a couple years ago too, where something happened, and I forget what it was. I think it was something like with Chinese lumber or something. I think, and they got nailed.
They got nailed.
Yeah. But the stocks, the charts. If anybody wants any information, I do my best to put detailed information on how to spot them on the website too. So it's a good educational tool. Just visit the site, go to the education tab, and go to chart patterns, candle patterns, and I have the stuff there too.
That's wincrease.com. And
yep.
On the education side.
Yeah. Yep.
The charts though, there's other ways to really, like me, I was about to say there's other ways to read them. Like me, I like to break it down a little more simple. We were talking about it, I think, a couple days ago, last week or whatever. Like me, I only roll with like support and resistance because that's what it's all. That's the name of the game to me. You know what I'm saying?
That's all you need. Yep.
Because my gripe with the sophisticated chart reading, like what you do, is I'm waiting a lot for setups. You know what I'm saying?
You gotta be patient.
So sometimes I'll see something and I'm like, yo, I could make a quick, $1.50 a share on this. You know what I'm saying? Or whatever. And I just, hop in, even though maybe, I'm not waiting for this pattern to play out. And then while you're waiting for it to play out, sometimes it doesn't play out. So you just miss a move altogether. You know
that's
what I'm saying?
true.
So you got to be willing to, like, I call that losing money also. You know what I'm saying?
Yeah,
like,
that's the opportunity cost. Yeah,
right.
yeah. But
you gotta lose money to make money sometimes.
Right. Sometimes.
And sometimes it doesn't play out. And there's a stock that I've been watching for a long time, and that's let me pull it up here. That was dang, I've been watching so long I forgot what it was. Oh no, stop. That's my GE. That's my GE right there. Leave me alone, man.
That's your little age stocks.
Yeah.
I wouldn't say GoPro AIDS though. I wouldn't say AIDS, man. AIDS is like Sears. You know what I'm saying?
Yeah. You can't. There's no come back. You know what I mean? There's no coming back from it. That's what I was trying to say. Like, you at least give GE some, like, you know what I mean, herpes or something. At least
herpes. Come on, man.
At least it's treatable. You know what I mean? It may never go away, but it's treatable. AIDS, you go.
Hey man, when we do this podcast, this gonna be this gonna be a funny one, man. This gonna be good. when we really do this one, I'm looking forward to it.
The stock that I was talking about was First Solar. That was the one I've been waiting for a setup for a hot minute, and it's just been kind of range bound. So to Cam's point, there's a ton of times where I could have just put a butterfly play on it and just let it sit, because it's just been between like 55 and 50 for ages now. I'm looking at it, it's been like 5 years just sitting there, right?
Mm-hmm.
Well, that's 70. Yeah, it's been playing that range for a long time. So there's a whole lot of opportunity that I missed that if I just would have did a range bound strategy like a calendar or a butterfly, just let it rock, iron condor, could have did all that. Yeah. But instead I've been waiting for it to set up to make a bigger move. So yeah, that's one that I could have done something. But then there's also ones where stocks are breaking out and you could take full advantage of something, So it's all potato.
Yeah.
There's money to be made either way.
Right. I never heard anybody say potato, but when they do the saying, when they say potato, I know what they mean, but I just don't roll up. Let me get a baked potato. I'd be like, what?
And you know what's gonna happen? We're gonna hear that tomorrow. Watch something on YouTube and be like, yeah, potato. Potato chips.
What about Tesla? What you see on Tesla's chart, man?
Oh, my boys that used to not be my boys. What I see on Tesla is, looking at the monthly, I still see 50-day doing great.
You still bullish?
Absolutely. 1,000%.
After seeing Elon Musk smoke weed, we all bullish now.
Yeah, so when it comes to stuff like this, when the weight of the world is on you and everyone's telling you the stock's going down, usually that puts more momentum to the upside. So when that scale flips and everyone's got to cover, and we've seen this already before, but technically speaking, we're oversold, and Tesla does not like being oversold. So I see a significant bounce in the making coming, where we're going to end up at like 320 at snap of a finger, the Thanos snap. It's just going to wipe traders out just like that.
See, man, I see. If we go back to what you were talking about with First Solar, I feel like Tesla has been range bound since.
Oh yeah.
I mean, they just can't. I mean, there's times they've been popped up to 380, a little bit past it a couple times, but they've been hovering around that like close to 300 to 330 range, forever.
Mm-hmm. Yeah, it's been a very wild range for it. But to to the charts point, it's been doing that for a long time. It was range bound before it made its move. So the move that it made before, it bounced off of its 200 day and it moved into a new range. And I think we talked about this before, Cam, where I said, you see what it did last time, it's likely going to do the same thing again. So it just stayed inside of that range last time. And then here we are now. We got the same range once again, pretty much on the absolute low end, 250, high end, pretty much like 380. It did the same thing before, where it was about 150 and got up to about 280. So here we are, deja vu.
Right,
just with a different number.
Right. I just feel like this is somebody, it's like sometimes we talk about market cap. I feel like Tesla is somebody where the market cap is like people are really, really stuck on that market, a certain market cap for Tesla. Like, I don't know what the market cap is around 380, but I feel like they're like, yo, they are not worth this. Like, when it get up to that area, they just like, drop down. But then also when it gets down toward like 250, I feel like people are like, yo, they are worth this. And then they start buying it up.
I'm gonna be honest with y'all. I don't think Tesla's worth more than 70 billion. That's it. I mean, I can't see Tesla being worth more than 70 billion because just the stuff they do. You know what I mean? Just a certain amount of risk that Elon Musk takes and the reward that he gets back for it.
Well, I think one thing is about to happen is all those government subsidies. I think that's how you say it.
Yeah, the ones that are expiring.
Yeah, I mean, they were saying, I was watching channel, and they were saying that Elon Musk he needs those to make profit on the cars. I think, with those subsidies, he's making something close to, I think, $2,000 a car. Now, when those subsidies go away, obviously he's going to be losing money. And, I think overall he's already losing money. That's like the only profit that he has. So he needs to, somehow they need to extend the subsidies, or he needs to do something else. You know what I'm saying?
Yeah. I don't know nothing about if the subsidies are in. That's interesting to research too. As far as the market cap is concerned, we got to remember that Tesla is one of those futuristic stocks. So the market will eventually look at, what's on board and what he's getting ready to sell and look at it as forward moving for everything that's going to happen. So they're pricing that in. And I think that's what happened last time, because last time the stock rose up, they were talking about something about the Model X's or whatever, and the stock started to move higher.
Well, going completely online was a smart move.
Absolutely.
Well, I think now he said that he's not. Well,
he backed it down. He backed it down
a little bit. I mean, they still going to do online, but I think he backed it down a little bit.
I think my boy's doing a little bit more than we, bro.
You doing that De La Hoya?
Yo, man, I think he be honest with you, man, he's a real smart dude. I think sometimes he's losing his mind.
That's what they say about every genius.
Yeah, I'm about to say, yeah. I don't really think that he's losing his mind. I think that he understands that just because
but some of the stuff he says one thing, then he takes it back.
Yeah, but that doesn't just because you say something don't mean that you gotta stick with it. Like if I say,
I get that, and I respect him for that, because most people wouldn't even do it. They'll just find another way to just spin it and just say, like, you know what, like, Donald Trump. We never really talked about a big 100-foot wall. You know what I mean? But we're finding different ways to create that wall. You know what I mean? Try to take back his word, but not really take back his word. But he would just straight out say, look, we might just went overboard and just said that, shut down all the stores. Sometimes he's a little flippy floppy.
Yeah, I kind of like that in people, though, because I don't want to sit here and be like, hey, man, I'm going to buy. If he's wrong, he's wrong. Yeah, we pick it on GE, so I don't want to be like, hey, man, I'm going to buy GE at $10. And then, it goes down to, $9. And then I'm like, well, I'm going to keep it. Even though I see it, I see the trend down. And, you know what I'm saying? I want to be like, I want to be able to adjust. Like, oh, you know what I'm saying? That wasn't a good decision. Let me readjust. Let me make a different decision. You know what I'm saying? That's why I like Elon Musk, because closing all of the stores, that's probably not smart, because if you want to play fair with the car dealerships and all that other stuff, you kind of have to have those stores or whatever he was calling them.
You need a store for people to see the car.
Yeah, you need a footprint. So maybe
Elon, go ahead and call me and Cam up. We'll tell you how to get Carvana.
And you cut us that check.
Cut us that check. Go ahead and go buy Carvana. You know what I mean? They're a great company. Like I said, we had them. We got them at $32. They're now $56. I
got them way lower than that. But continue.
Well, I'm talking about from the beginning of the year.
He said, "Speak for yourself."
Well, I got it way lower than that too, but I'm talking about the beginning of the year. You know what I mean? So, it's up. It's up 77% since the beginning of the year.
And shout out to, did we ever figure out who was the author of that whole thing that I post in there?
I forgot that dude's name, man. Whenever I talk about Carvana, I always say, man, that dude in our chat, man, whoever you are,
he gave us a gem.
Yeah, bro, you that guy. Well, he gave it to us at $20. I know when I heard about it, it was at $20. That's when I got it.
Yeah,
whoever you are,
got the gem in there. Yeah, thank you.
I forgot your name, man, but thanks. You know what I'm saying?
You were just gonna call you that dude.
That dude, that MVP.
Yeah,
that guy.
And just to let you know, when you call that dude, that's solid.
I know when you call it the cure for chlamydia, hey, that's solid, man. When you call it the cure for chlamydia,
yo.
When you call it the shot, and I ain't talking about Kobe. When you call it the shot, hey, that's a big accomplishment, man.
That dude.
Yo.
Man, we clowning.
Yeah. Man, Carvana. I don't know, man. That might be the way of the future, man. I saw a commercial for them for the first time.
I did too. I saw a commercial for it.
I've been seeing.
Oh wow!
I've been seeing ads for Carvana on YouTube a lot, not really on TV.
That's where I saw the commercial.
Oh, okay, yeah. I guess I don't call YouTube stuff commercials. I just call them ads. I guess they're the same thing, but
same thing, man. It just, bro. I be. One time I clicked on a YouTube video. They said YouTube video has 8 commercials. I was like,
yeah, somebody gotta get paid.
Yo, they really just, when you watch a TV show, be like 25 commercials.
Yeah.
And then it be all like the good parts.
Hey, that's how they get you.
Yeah, right when the hype hit, and you'd be like, oh, and then it'd be like loud. The commercials would come all in blaring.
Come and get this towel for $9.99.
But so we had our chart buddy Xtro on, man. You want to give any words of encouragement to people? Because I know, like, sometimes reading the chart, man, sometimes it's frustrating. So
yeah, and
right. It's the most frustrating thing.
We'll break it down to the basics. So what Cam was talking about earlier about support and resistance, that's all you truly need. Everything else after that is just extra. And I can tell you that because to read a chart, if you can identify those 2 points, you'll be able to make money. So if you could do that and you're happy with that, go ahead, be happy with that. You ain't got to be the Nostradamus and trying to guess where a stock's going to go 3 months from now, yada, yada. All that stuff is complicated and often sometimes not worth it. So if that's not your cup of tea, don't make it.
Right.
However, if somebody does want to get a little bit of additional education, you can continue on from there and start adding stuff like indicators. And you can add on to that some chart patterns, candle patterns, and you can learn how to combine those to make an accurate read. And I also put a lot of that information on the site too, with how to use them and use specific charts like your weekly, your monthly, in order to try to gauge where a stock can go. That's how I ended up getting good at what I'm doing. And it took me probably 3 years or so of application wise, just looking for it, seeing what it is, and making moves on it. They're like a cup and handle pattern. I can tell you that all day. That's been my breadwinner. You know, I can look at that and see when that breaks out, how to take advantage of it, develop option plays, inverse head and shoulder pattern, you know, combine those with like a morning star pattern when you see stuff like that, when things get too low, and you can get some bread. So if you try to do something more with saying like how I just read Amazon back to 1700, Google back to 1200, all those reads and stuff like that, then that's when the patterns come into play. But if you like, I don't care about that, it's going up, I just want to buy a call or put spread, something like that, then just go ahead with the resistance and the support.
Yeah, man. So,
man, I'm gonna say keep it simple is a good way to consistently
keep it
make
simple.
money.
Keep it simple, and then if you want to do more, just make sure you know the fundamentals. So
yeah, you're building off of that foundation.
Yeah.
All right, man.
I mean, go ahead.
Yo, why do I always forget what I'm gonna say right here? And this is the part where it's so scripted. You can follow me on anything at Camboni11, Instagram, Twitter, stock twits, anything. Hit us up to get in our Marathon Money Facebook chat so you can get these good plays. You can bother Xtro and ask him a bunch of questions. You can bother Kenny, ask him questions. Jerron. Nobody really asked me nothing. But but hey, that's all. It's all good. So where can they find you, Kenny?
Kenny Con 23. Keep it simple. That's all.
Xtro.
You can find me at Wincrease Team. That's on Twitter, Stock Twits. Pretty much anywhere you can find me with that same name.
All right, man. Until next week. Peace.
Peace.